All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Hope everybody had a good holiday weekend here, enjoying the extra time off, but now we turn our attention back towards the markets here, and we'll start off as usual with the S&P 500. So we did finally get the Santa rally. It took all the way up until really Tuesday, Wednesday, Thursday of last week for it to happen. We had a sell-off from the previous week into Monday. And then we had a very light volume float. As you can see, the volume just dipped off here, and we got the holiday volume. This was actually a 4% rally here from the lows. So it was definitely a Santa rally. And, you know, typical of this year, you get that light volume, the big boys leave, and that bodes for upside. Getting the biggest bounces here was big tech. So we had the triple Qs up. We'll talk about this trend line here. So if we can get above this trend line, going back to the end of November, we could possibly see a move back up to double top here, and it would coincide with this topside trend line that we've been following for a while. Typically, when you have 3 bars up in a row like that, though, you tend to need to pull back. So we'll see if we get a bit of a pullback Monday. The Monday after a holiday weekend is, you know, they call it a holiday hangover. So we can tend to get some light volume. It may be a boring session, but with everything going on right now geopolitically, it wouldn't surprise me if we had some turbulence, or if we, had a monster up day. If the volume was light enough, they could take it up, and then maybe you could trade up to double top. Nonetheless, though, big tech getting the biggest bounce. IWM, Russell 2000 also getting a big bounce off the lows. However, this will have resistance around 225, 226 here. You see these pivots here, and the moving averages above that. Russell 2000 also making a lower low recently, as did big tech. So triple Q is also making a little bit of a lower low here, and that is showing a little bit of sign of weakness. Overall, if you look at the NASDAQ composite as well, that has not been very strong. That made a significant lower low and is, well, much more off the highs here than the triple Q. So that's something to keep an eye on. Big tech getting a bigger bounce, but overall, big picture, it has been the weaker of the major indices, as has been the Russell 2000. S&P 500, I do have that going up to and at least tagging about 475. So that would give you a new all-time high. I don't know if it closes up there. I don't know if it's just an intraday high, but I do have it getting up there, which would also coincide with this lower trend line, the previous lower wedge trend line that we've been following for a while as well. So that would be sort of your near-term resistance there on the SPY. Let's move over to some sectors here. So some of the areas that I think have been weak are Dow transports. Now, first glance, this looks like nothing wrong here. I had a big blow-off move from the Avis budget debacle. And then you're starting to just pull back here. So this looks like bullish consolidation. The problem is on the weekly time frame. You lost this blow-off bar here and closed the previous week below that. So that does indicate a failed bullish pattern here. Now, you did find support at the 20-week moving average, and you're getting a bounce off of that. So as of right now, there's nothing wrong. However, that close that previous week would signal to me that we'll probably see a lower high, and we'll probably come back down and test the lows here. So that is an area of weakness I'm seeing. Also, cloud software, it did get a really nice bounce this week, just like everything. But if you look on the weekly, it's kind of just chopping sideways. So we had this sharp sell-off, and it's just kind of chopping in the lower range of this candle. So this could be putting in a bear base to get through this support area here and the 50-week moving average. So I don't really like what I'm seeing from cloud software. I don't like what I'm seeing from the Dow transports either. Another area that's been weak that I've been following a lot is financials. So broker dealers right here nearly triggered a head and shoulders the other day, closed back above it. So we did get a bounce, and it is holding up for now, but it's been weak. XLF, same kind of deal. We had a bit of a reversal doji on Friday as the rest of the market was bouncing very nicely and finished near the highs. XLF closing below this red bar. It's going to have some resistance up here, but it has been underperforming. Same thing with, we look at specific financials, JP Morgan. That has been, look how far off the highs that is compared to, the rest of the market here. So financials weaker, Goldman, same kind of thing here. Bank of America, this looks like it's trying to put in some type of a bear base. So I'm not really seeing a whole lot from financials right now, which is not a good sign. If we have big tech weak and financials weak, really, where are we going to get leadership from? So let's take a look here. Energy would be an area that you might look for. Well, crude has had a nice move here. Did come off the lows. We talked about this ABC up pattern. That is playing out very nicely. By the way, we are in the money on UCO, which is 2 times long crude. That is with the patrons and on carnivore trades, by the way. And so I do expect that, at least on spot crude, to get up to about 77. That's kind of my target area here for this little ABC pattern. But nice little move on crude there. And, you know, just really oversold. A lot of this selling was just margin selling. So not surprising to see a nice snapback rally there. However, if you look at the energy stocks, the XLE, much weaker of a move here. It got all the way down to that 200 moving average on the daily. You did manage to hold it. You held this kind of gap window area, and now you're getting a bit of a bounce. But this chart also looks very similar to an XLF here. So energy stocks are a little bit weaker. XOP also weak, and OIH has been weak for really since the middle of October. So the oil and energy stocks are looking much weaker than spot crude itself. Speaking of other commodities and energy, natural gas here, kind of a dead cat bounce. I still think this is going, it's got one more leg lower here, and then it will be time to get in. I do have a really good level planned out for this one. Hopefully we can get down there this week, and that would provide us with a really good buying opportunity. But you notice how it hasn't really, you know, we got a quick little pop off the 50 MA 2 weeks ago, and then we've just kind of chopped sideways since then. So that is looking like it is putting in a bit of a bear base for another little push lower, and then once we get there, I think we have a really good buying level there on nat gas. Let's take a look at the dollar index. So nothing's really changed here on the dollar via DXY here. Move up, sideways move since the peak here, and I think we're just consolidating into the end of the year. I think next year, possibly as early as as soon as the first week in January, maybe the second week, we see a move up to the 98 to 99 handle on the dollar index. But ultimately, all this chop here is just bullish consolidation. You have this sharp move up, and it's holding on here to this upper range. And it's just kind of waiting for the 20-week moving average to kind of upslope here and catch up to price. And I think once it does that, the dollar will get one more final move up before it runs into major resistance. Let's flip over here and look at some Bitcoin here. So Bitcoin has done nothing for really 2 or 3 weeks, but finally got a little bit of a bid here going into the Christmas holiday. And then you kind of have this little, you had a nice little pop here, and now you're just consolidating this pop. So it looks to me like it's trying to set up for a move back up to this breakdown area around 54,000, 53, 50, 54, somewhere in that vicinity. And you just have to consolidate to take out this red bar essentially. So the next area of resistance will be right here, 150 MA on the daily. But it looks like we're setting up for, a little pop into that. So near term, I think, I've been saying for a little while here, I think Bitcoin probably trades up into that range. And then from there, we'll see what happens. But near term, I think it's got a little bit of upside. I like Ethereum a little bit better here. The chart on Ethereum is just stronger. Look how much closer to the highs it is. Then Bitcoin, Bitcoin's just significantly off the highs compared to Ethereum. And the pattern is, very similar, and it's consolidating to take out this red bar high and, attack this red bar high eventually. So near term, I would say a move to about 4,500 on Ethereum would make sense. And that would coincide with kind of this area here on Bitcoin. So, 54, 55,000 or so. Let's flip back over and we'll look at the gold market next. So gold, again, we talked about this little, at least during the middle of the week, I was talking on my channel. I had the little pop here, 3-bar pullback, and now you're seeing follow through. If gold can get above this high, actually we'll call it this high at 1819, then you have a chance to trade back up to 1840, maybe 1850 at this high. But near term, that's just kind of really what you're looking at here. And obviously support is down in this range if it were to roll over. So nothing really too new here to report on gold, but those are the near term levels. Silver did have a little bit of a stronger pop though this week, as it was able to take out the recent high. But again, you're gonna look for resistance here at about 2306. That's your high there. And near term, 2350 right there, those moving averages. This is also where you broke down out of. So that would be your near-term level on silver. Platinum and palladium, again, getting a big bounce, also very oversold. Your area here is very simple on platinum, 1,000, maybe you get up to 1020, and then you'll stall out. Palladium, same kind of thing, although I think this probably stalls out around 2030. Maybe it gets up to that 100-day moving average there. But nice bounce there on palladium. The other metal I do like here is copper. I've been talking about this for a couple weeks. Starting to pop here, so we'll see if we get some follow through this week. If copper starts to bid, and this is something I noticed, notice how we just talked about silver getting a little bit bigger of a pop than gold this week, at least on a relative basis. It could be due to industrial demand, and that would make sense if copper is getting ready to bid. Then it would make sense if it's due to industrial demand, then silver would be getting a bid as well. So we'll keep an eye on that. But again, liking this pattern here on copper. It's holding this inside green bar here, and yeah, it could take you back up. A move back up to the highs if it does get a bid, but we'll have to watch that. If it closes below this low here at 425.55, then this pattern has failed. But for now, it's holding up and it's looking all right. So copper in a decent position here overall. Those potash stocks we talked about starting to bid back up a little bit. So Intrepid coming back, pulling off the highs, tagging that 100 MA, now getting a pop. Mosaic already starting to pop a little bit. This will have resistance. Yeah, it's just about into resistance now at $40. And then near term, maybe you trade back up to gap fill around $41.50, $42. But that's kind of your near term level on Mosaic there. But the potash names are holding up reasonably well. CCJ, actually, let's just look at URNM first. So again, trying to hold on to the 75 handle, but I'm starting to think this probably does want to go down and get down to that $60 area. The reason I say that is it kind of has a similar look to it as the IGV that I was talking about earlier, where we've come down, we've held that key level, but we've hit it twice. We're bouncing back up. You don't want to see a lower high here. If that is the case, then it's probably consolidating to build up strength to push down through that 200 daily moving average and go down and hit that 60 handle. But that will be a very good level to buy. So just keep that on the radar. CCJ kind of same thing here. Did make that low at the 200 moving average, got to bounce off of it. URA, same deal. And, Denison, all these stocks obviously are going to trade about the same here. But Denison is the weakest as it is the highest risk one out of the bunch. Overall here to wrap up, so we do have a cycle coming in to play. Obviously, the patrons on Carnivore Trades understand that. So that's obviously not public information. But in any case, I still think that even though we have seasonalities and holiday volume typically coming into play around this time of the year, there is a chance that we do see some major turbulence. For instance, there is a major news out of Turkey. Obviously, the lira is blowing up versus the dollar. Their stock market had basically crashed. This is just the TUR, which is the iShares ETF for the Turkish Stock Exchange. But notice how it crashed down. The government banned short selling temporarily, so it caused a huge spike here. Ultimately, that will not serve them well, as short selling actually helps prevent crashes at times. But they did get a bid here. There's a lot of turbulence going on out of Turkey. There's turbulence in Ukraine right now. Russia is really flexing their muscles. And the biggest thing I noticed technically right now is you have the Dow Jones leading the stock market. The Dow Jones and the S&P are the two strongest indices. And in bullish trends, bullish uptrends, bull markets, you want to see the Russell 2000 and you want to see the NASDAQ lead, as they are sort of the risk on indices. And to see them lagging the Dow and the S&P is just not an overall sign of strength. But we'll see if we get some holiday volume, and that I do expect the S&P, at least on the spider here, to go up and tag 475. Don't know if it sticks for very long, but that is kind of my near-term bullish target, I would say. And again, holiday volume this week, so maybe they want to float the market up a little bit. Maybe there's just if the big boys aren't home, the cat's away, the mice will play, essentially. Remember, next weekend is New Year's, and so we won't have any holiday trading, any holidays for New Year's, as it falls on a Saturday and Sunday. So there's no reason for the holidays to get in the way of New Year's this year. But anyways, guys, just be careful this market. We've had a lot of volatility the last couple of months, and just because we had a nice rally doesn't mean they can't sell this thing. And just because we have holiday volume doesn't mean we can't see some type of continued volatility in this market. Anyways, guys, you take care. Have a great rest of your holiday, and I will talk to you all next week.